Hi everybody, welcome to another episode of Explain This Stock YouTube show. My name is Aziz, and today we're going to look into a company that has been making headlines in both good and bad news, and that's Google. We're going to go over the most recent news as well as their product approach, and finally we'll go over their financials. As usual, we'll be using Explain This Stock platform, and if you haven't tried it yet, go ahead and sign up. It's absolutely free, and you get access to all of this data for free. All right, let's get started. So a couple of months ago, Google has been sued by the FTC for an antitrust case. And in August this year, 2024, a federal court determined that Google unlawfully maintained monopolies. The judgment was that they maintained these monopolies in the general search services and advertising markets by maintaining these exclusive agreements with these platforms, essentially setting their Google search as the default search engine was a monopolistic move that was determined by this court. If you're interested in all of the evidence that was used to determine this ruling, there is a rather lengthy 277 pages document that I'll make sure to add in the bio of this YouTube video, and you can find more details about how did they come up, how did they end up in this ruling, in this court ruling. However, that was the extent of the court ruling. There was no instruction or remedies or action that this ruling imposed on Google. They pretty much left the door open for anyone to speculate on what this measure could be, essentially. And that's where the internet went wild, right? The way I think about this is that this news might be scary to a lot of investors, but I like to remind myself that this isn't Google's first rodeo. It might be scary to you and I, but Google has literally a battery of lawyers and paralegals that do this day in and day out across multiple markets and the countries where they operate, right? In fact, Google has expressed their intentions that they're going to appeal this ruling and that these proceedings will probably last years before they end up in a final actions that Google needs to take. And I think, in fact, in my opinion, I think Google has ample ground to appeal this decision, especially given the latest launches from competitors, right? OpenAI just launched their search version of ChatGPT. Perplexity has been around for the majority of this year, and these are real and compelling alternatives that users have. And even more than that, now you're seeing with competitors, you're seeing that ChatGPT integrates well with Apple. This was the most recent product launch that Apple disclosed. So I do think that Google has a lot of ground to fight this court allegation, and by seeing the rise of a lot of these competitors, I think what's likely going to happen is that maybe this is for the best. Google is going to lose some of their market share in the search space, and this will lead to a decrease in CPC cost. Overall, I feel confident that Google has its ground to fight this ruling. And the most recent news actually that the market got excited about was the new FTC appointed chairman. And if you don't know Andrew Ferguson, he's actually succeeding to Lina Khan. And Lina Khan was very strict and very rigorous about these antitrust, breaking down essentially big tech. But Andrew Ferguson has a more lenient stand against big tech, and has voiced his dissent under Lina Khan. So investors are actually anticipating that under this chairman, things will probably go better for big tech. A drastic outcome could be that under Ferguson, this antitrust case might altogether be dismissed. That's probably a bit too drastic, but that's a possibility, right? Speculators are out there speculating about these events. But overall, I think the situation and the regulatory threats against Google are overblown, and I think Google is in a very good position. So let's talk about Google's products now. Over the past year, Google has received a lot of heat, right, about their ability to ship great products. People have even prematurely pronounced Google dead in the water. All of their demos were failing. Those were live demos, and arguably things are bound to go wrong in live demos, but people put Google in a coffin too soon, in my opinion. And what I tell myself when I see these failed demos from Google is that this is another evidence that Google is an engineering-driven organization. They're not a product-led organization. In fact, their very existence is a result of a technological advancement. And this is the paper that Brin and Page coined in the late 90s, where they literally presented this service Google in a academic paper. So really, this is the pattern at Google where they invest a lot in research and then they try to productize their research, right? They did that for the birth of Google, and they're doing that for subsequent products at Google. Probably one of the most recent products with this pattern is LLM, right? The fundamental technology behind LLMs are transformers architecture, and it was actually Google Research that published this architecture in 2017. And yet the irony is that it was OpenAI that was able to productize this technology and then disrupt once again the search space. And Google is just trying to play catch up now with their first launch with BART and then rebranded it to Gemini. So putting that into perspective, this was actually coined by Steve Jobs, right? A lucky company might come up with one revolutionary product, but Google, alongside Apple, are among this very narrow circle of companies that disrupted many industries. And their products are really breakthrough products. If I had to cite just a couple that Google came up with in the last couple of years, AlphaFold is one of them. This is a major breakthrough in the chemistry, biotech, and pharmaceutical space. And if you're not very familiar with this space, essentially AlphaFold helps scientists predict the molecular structure of proteins. And pharmaceutical companies and biotech companies' main focus is creating molecules that will behave a certain way, and that's largely driven by the molecular structure. So if they're able to have a good understanding of what that molecular structure will be, then this is a major help to their development. Most recently, Google launched another technology breakthrough, and this time it's with chips. Not the typical chip that you and I hear about every day, CPUs, GPUs out there, but this one is quite unique. It's actually a quantum chip. And if we look into their website, this is a chip that's very different from what the typical GPUs and CPUs chips do. But that's still not it. That's still not the full picture. Waymo is Google's robotaxi service that raised $5.6 billion for a valuation of $45 billion. And then that's as a result of their expansion in LA, San Francisco, Austin, Phoenix, and most recently, Miami. And then this comes on top of the fact that other competitors out there are pulling the brakes on this industry. GM actually has decided to pull off the robotaxi service, and then Google is just doing the right things that they're able to expand. So this is when you see that a company is doing things right. So overall, while Google might not be the best at productizing every single piece of research that they do, their success rate is not that bad, and they continue to disrupt a lot of industries. Let's now have a look at their financials. Google is particularly good at diversifying their revenue streams. It's true that they have a primary cash cow, and that's their ads business, right? In the Google search as well as the Google network, YouTube ads, so that generates over 200 billion in revenue. So Google search on its own generates $175 billion annually. But YouTube ads is growing quite substantially, right? The highest growth revenue stream for them is actually Google Cloud, that's growing year over year by 30%, right? In 2022, Google Cloud had a revenue of 26 billion, and in 2023, that was 33 billion. And I suspect that 2024 is going to be even better. If we move to the quarter view, we can have a glimpse of what 2024 would look like for Google Cloud. So 11 billion in Q3, Q2 10 billion, that's 21, and Q1 9 billion, that's 30. So in 3 quarters, they're already at 30 billion. So they probably will be aiming for 42 billion for 2024. So they do a really good job at diversifying their revenue streams, and just their bets alone, like other bets, they generate quarterly almost $400 million. And these other bets essentially are their bets that have a significant upside, and they're still trying to find their product market fit. But if we now have a look at their free cash flow, how is Google doing at generating cash essentially? This year, last 2023, they did 69 billion, and 2022, 60 billion. So this is pretty much a 15% year over year increase in free cash flow. Now, the one downside that I see here is that Google is not good at maintaining their stock-based compensation under control. It continues to be it actually continues to increase year over year, and then they seem to need their stock-based compensation to attract talent, so they're not able to keep that under control. And we can even see that laid out in their executives' compensation. So if you look at, for example, this senior VP, like the bulk of their payment to stock awards, $40 million in stock awards. Sundar took a pay cut last year. But yeah, you can see that a lot of their executives made quite good money last year. What I'd love to look at right now is how attractive is Google stock right now. So we're looking at the PE ratio over the 12 trailing months here, and it's around 25 PE. When you compare that to the other FANG companies out there, so if you compare that to Amazon is at a 49 PE, almost 49 PE. Apple is at a 39, so 40 PE. Meta is at a 29 PE, and Netflix is at a 51 PE. So when you compare Google to the other FANG out there, Google is dramatically cheaper. A cheaper company, a cheaper stock. Lastly, if we have a look at how the FANG has performed this year, so we go to the performance tracking tab, and then we add Meta. Meta is at a 90% performance this year. Let's look at Netflix. And then let's add Apple. And let's add Amazon, and let's add Google. So Netflix is off the charts. You would have doubled your money over if you invested at this time last year. Meta is at close to the 90%, and Google is right up there with 47%, Amazon 56%, and Apple 27%. So relatively speaking, Google has a lot of upside from its PE ratio, and then hasn't gone through the explosion that Netflix and Meta has gone through over the past year. So for me, those are good signals that there is an opportunity here for a buy. That leads us to my closing thoughts. So my thesis for Google is very simple. I believe that Google still has a lot of upside at this valuation for a couple of reasons. The first one is the logical financial reason. It continues to generate free cash flow year over year, growing that. Even though stock-based compensation is also growing, but the magnitude that Google is able to generate free cash flow are insane. So I think they still have quite a strong financial situation there. I'm comfortable and confident that they will maintain this financial situation even more in the future, given that they are investing in bets that have the capability of disrupting a lot of other industries. So that puts them at a very good position in the robotaxi service, in the quantum chip industry, if that ever becomes an industry. And that makes me think that Google has a plan figured out for their future, even if they start losing ground in the ads business. And then their R&D is quite healthy, right? We went through a couple of examples where they continuously publish a lot of research that oftentimes is much better than academia. And that's a wrap for this episode. As usual, if you like this video and want to support this channel, go subscribe and check out ExplainThisStock.com. See you later.